Greetings. In this video, I would like to formally introduce the moderator for Markets with Gil channel. This is a channel available in the members area. This trader has been a good friend of mine and a mentor for over 10 years, someone who has been trading for over 30 years. He has done it all when it comes to trading. I was very excited when he decided to join our server. He starts off every day with just key levels for Nasdaq and S&P, and as the session progresses, he identifies prices where he would like to be long or short at. While these signals might be clear to more experienced traders, let's face it, we are all at different points in our trading journey. And so a newer trader, and by newer I mean, let's say someone who has been trading for less than 3 years, these signals might not be very obvious. So what he's going to do over the next few minutes is to talk about these levels, how to handle or approach these signals, stops, targets, and everything else. So without further ado, here is Gil.
Thank you, James. It's great to be here with you today. And let's talk about the Markets with Gil price levels, how I post them, how we approach them. As you mentioned here, in the morning, in the pre-market period of time, I like to post the key levels that I believe are going to come into play for the market in this session. And as I did Friday morning before the market opened, I indicated that 72, 67, and 45 were going to be important levels that we would be looking to use during the session. Here is the Friday session, as traders can see on the chart. We closed Thursday's session right at my 72 level. And we can see that we opened below 72 and 67. This was an early indication that the market was in a weaker position. Now, I did not call specifically to short the 67 level early on in the session. I was giving the benefit of the time to see if we could get up and test 72. I did, however, call for a long trade down here at the 45 level. Now, I get a lot of questions. How would I use this level to trade? As you said, perhaps more experienced traders may have something that they're comfortable with that would indicate to them that they want to be in this position. What I will typically do, if I feel strongly that my 45 level is going to give me a tradable reaction and I'm going to call for a long trade, I'm comfortable buying in front of that price by 2-3 ticks. And as you can see in this sample, the market did indeed stop just prior to the level. Now, a normal reaction utilizing my price levels is going to be level to level. So a full trade, if a trader were going to attempt to stay in the full move, would be be a buyer in front of or at the price level of 45. My target would become 67. I will typically call for a partial exit once we get to about to the halfway point. So on Friday, we called for a partial exit 55 to 60 to take something off. Now, a smaller trader may want to book the entire profit at that halfway point, and that's perfectly fine. Normally, this move is going to complete in the 67 price level. As I mentioned earlier, going level to level is how my levels operate with the market. We can see here that the market stopped and started to retreat and come back. This would have been an early sign, perhaps, of a problem. Now, if I'm going to have a trailing stop, certainly it's acceptable for the trader to have a trailing stop at a break even or perhaps something a little bit higher to lock in any remaining gains. Let's say hypothetically that the trader was out of the position or trailed their stop to break even or slightly above break even. Let's then consider the second buy at 45, which in this case did not work. Normally, I'm going to suggest that we have a hard stop of no more than 3 or 4 points below the level, or a 5-minute close below the level also is a sign of weakness. As we can see here, we had a 5-minute close below the level. The market attempted to reach the level again and subsequently failed once again. So we would have been out of the market with a small stop out. Again, as I said, if this level is going to fail, the market is going to continue to decline to my next level, which in this case on Friday was 57.22. That did not happen. The market subsequently, a few 5-minute bars later, recaptured the 45 level. This signal would have had me long again, buying at or near the 45 level. The fact that we did not complete the lower level and recaptured the prior level is a sign of strength and bullishness. And I would have re-entered the trade long with the same type of stop placement, and I would have held out after taking a partial exit halfway. I would have taken my final exit off at the higher level of 67, which we can see worked beautifully here. We then can see that the 67 level provided a fantastic short opportunity. They did not breach it, did not get above it in this case at this time, and they subsequently failed and fell and closed below the 67 level, indicating weakness and a short trade. We could have shorted at 67 on the first touch with that 3-4 point stop. I know I've got 72 above me. The market failed. And as I said, level to level, we can see that the market failed and completed, once again, the 45. 45 on Friday provided yet again another terrific long trade. Could have bought the 45 level, put my stop. Now, in this particular case, they did go down 3-4 points below. If a trader was working a tight stop, it was perfectly acceptable to stop out. You'll notice, however, that the market did not close the 5-minute bar below the price. It closed at or above the price. Assuming a trader stopped themselves out with a 3-point loss, they could have re-entered the trade and once again ridden it up to the 67 price level and subsequently to 72 as well. So there's just a couple of examples using Friday session in this particular case to show how the market indeed is using my levels, level to level, level to level, level to level. This beautiful trading range for Friday gave us multiple long and short trades. Again, here is a great example of taking a small partial stop out, a small 3-4 point stop out, waiting for the market, reading the signal, and re-entering the trade and benefiting from what was a fantastic trade opportunity, more than compensating for the stop out that occurred here. Wonderful short opportunities here and here that traders could have taken advantage of. So I hope that helps a little bit. Certainly traders can reach out to me directly in Discord. They can ask questions. I'm happy to help any way that I can. I hope this has been a little bit more informative and helpful, and I look forward to doing more of this with you in the future. Thank you, James. Really appreciate this opportunity.
Thank you, Gail. Very informative. By the way, a quick comment about that 45 buy. This is actually a trade that I took on Friday. I posted it in a public channel, so it is available for everyone. This is the 45 buy. As a matter of fact, I suspected that they would not actually touch 45. I front ran it a little bit with a long at 46.50. I believe the low was 45.50. Now, why was I so confident about this 45 buy? Well, if you take a look at my trade indications channel, so every morning about 2 hours, an hour and a half to 2 hours before US session opens, I post levels and direction for S&P and Nasdaq. And if you can see in the S&P, look at the lowest level I have, 45. 45 was the lowest level I had for Friday. So now when I have this, right, and this is again available to all members, when I have this 45 and then I look at Markets with Gil and he says buy 45, when this happens, the probability of success is just enormous. Again, I don't have any statistics to back this up, but I can just tell you when this happens, it's probably 85 to 90% probability of of success. Now, it's not something that happens often, not like every 20 minutes or something. It might happen only 2 or 3 times a week where, let's say, my lowest level coincides with markets with Gill recommendation to go long. But when it happens, it is just super powerful. So just thought I would mention that. I take these trades as well. As I take all trades that we have, in a high probability setup, not to mix too many things, but all these trades that I post, I take myself, and you can find those results in a trade journal where I post the screenshots. Whenever I can get screenshots, I post screenshots along with the rhythmic dashboard. I have a dedicated account specifically for these signals. So once again, great interview. Thank you. Make sure you leave a like. It does help us grow the channel. Make sure you are subscribed and come visit us in Discord. Thank you all.